Good afternoon, Bob Dalton coming to you from Allendale's trading floor here in McHenry, Illinois. It is Monday, December 6th, 2010. We had the markets lower here, corn and beans throughout most all the day. Wheat was higher throughout most of the day and night. Actually, wheat opened up very strong last night in a continuation of the move that we saw on Friday, and did hold on to most all of the gains that we saw here today. Actually made some new highs with about a half hour left in the trade. Where did we finish up today? Corn March contract down 5.5 at 5.68. We had soybeans down 11 3/4 at 12.88.5, and the wheat market up 14. That's Chicago March up 14 at 7.93. All along today we had higher dollar. And crude oil, for the most part, was lower, although it is a little bit higher right now. We're up 11 cents in the crude at 89.30, with the target up there now $90, not all that far away. So crude oil has been running nicely for the last 3-4 sessions here. You got the dollar taking a pause on the pullback we had, and going a little bit higher here today. See if we can hold this support going forward. And in the grain markets, wheat. Pick a story. There's probably a dozen plus out there right now, if you're a bull that you're following, to cause wheat to go higher. We're still dealing with some very large world stocks of wheat. There's elevators here in the western plains in the U.S. That have wheat piled up on the ground outside the elevators now because they have so much crop they have nowhere to put it, and it's not really moving yet. So a lot of wheat fundamentals out there that are friendly. However, here domestically, there is a bunch of wheat, and the farmers that I talked to are saying, I can't understand why these wheat prices are going up, but I sure love it. So take advantage of these prices while they are available. We are testing some contract highs in some of those wheat contracts, more deferred contracts right now. So go ahead and call us if you are looking for hedge recommendations or want pricing advice. We'll be more than happy to discuss it with you. Corn and beans, we are looking to get hedges done, in the corn, up above $5 in that diesel 11 contract. Soybeans, we think we could see a big run up here in the beans due to some numbers that we're putting out regarding demand numbers and production numbers and what have you ahead of the USDA's report here on Friday. Call in if you want the details on those. I'll give you a little teaser here. Rich did come out and tell us that our stocks to use on soybeans right now are the lowest. We're anticipating them to be the lowest since 1953. That's 1953. So we have some very tight expectations of very tight stocks to use on soybeans, and that could very well produce $13+ soybeans. As a matter of fact, our upside target's $13.75. So keep an eye on the beans. We do think we have plenty of hedge opportunity to come here. Don't let a day like today where we're down 11 3/4 discourage you and say maybe I missed it. Hold tight, call your broker here at Allendale, and we'll go over some of the strategies that we're trying to implement. Over to the livestock, today we had cattle up only about 5 cents in that Feb contract. We're at 106.42.5. Feeders were down 17.5 today, and the January's at 118.50. And you have hogs right now, Feb hogs down 132.5 at 75.25. Now, something to note on the cattle here, we are seeing some of the highest future prices we've ever seen in the cattle market. Cash prices, 108 is the highest that we saw. And that was back in 2003, 7 years ago. But these future prices right now are some of the highest we have ever seen, if not the highest we have ever seen. So those of you who are cattle producers and you have cattle either that you would hedge off as feeders or fat cattle that you're feeding out right now, pay close attention to what's going on. Stocks are tight. We're actually at 10-year lows as far as supply is concerned right now on the cattle. And you got to pay attention to what's going on in the economy. The unemployment numbers last week were not all that great, but they're saying that because retail sales are up this year, those who are working are spending more money. Those who aren't working, of course, don't have the money to spend right now, but those who are working are spending money, and they're offsetting the loss that we're seeing in certain industries due to those who aren't spending any money. Those who are spending are more than making up for what they're losing off of the high unemployment numbers. So kind of confusing explanation. I'd be more than happy to go over with you in detail if you want to call in. Phone number here is 800-262-7538. Also, you can subscribe to our research and find out a lot of the numbers that I'm not sharing with you right now that I have in front of me that are for subscribers only. Feel free to hit our website up, allendale-inc.com, register for the research, and everything we put out would be available to you. Tomorrow we will officially release our expectations of the USDA's numbers here for Friday, and we'll go from there. Any questions, give us a call. The number again, 800-262-7538. Good luck trading this week.